All right, welcome to another episode from the Chart Readers. Wanted to make another quick video here. I'm going to cover the wheat sector, and I mean, things are starting to get a little bit concerning right here, all right? I just said a lot of the similar things on my last video about tech. You know, tech is doing better than, I don't even know if I want to say those words. Let's go to the chart and talk a little bit. Look, you know, when I talk about this sector, the Dow Jones matters a lot to me. And hey, the Dow Jones has been beautiful the last few days, all right? When you look at the S&P 500, exact same beautiful the last few days. And hey, NASDAQ doesn't matter, but even the NASDAQ was beautiful. And when all three indices have that crazy strength unison, all of them over all five, all of them just flying, gapping up to new all-time highs every single day. When that happens, and you know, on the Dow Jones specifically for this video right here, I expect all our little stocks that we like to buy and sell and hold and flip, whatever your thing is, stocks should go up. That is the complete opposite of what's going on essentially in this sector right here. Tilray is a little bit more flat, I would say. CGC, you can definitely see, is definitely on the more downtrend side right there. MSOS, more downtrending than flat right there. SNDL, more downtrending than flat right there. HITI, more down than flat, let alone none of these being up like the index. It bothers me. I said the exact same thing for the tech stocks that I like. You know, I'm not going to cover this, but I'm telling you, this isn't hate on the sector here, right? This is just kind of the odd reality of something different's going on. You know what I mean? And I'm trying to put my finger on it. And hey, believe me, there are things that are going up and gapping up with the market, but not everything. And yeah, it's just like I said, a little more annoying, all right? And if you saw me do it when I was going through them, the one commonality, and I'll get to the details shortly, is all of these are basically at, around, or under a very, very important support, right? You can see this is trying not to lose the 50, right? You lose the 50, the next moving average is down there. So it is important that these hold, all right? And you know, that's what I'm going to mainly be talking about. My cat's trying. What are you doing? Hey, stop doing that. Want to get out of here? Come on. What are you doing? Get out of here. Making some disruptions for the people. Hey, I do apologize about that. Okay. The other thing I quickly want to talk about is FOMC did happen today. Overall, I don't think it was horrible. I think there was a slight bit of uncertainty when he said there's no guarantee for December rate cuts, but he definitely said, you know, it's possible. He didn't imply that it wasn't going to happen. Just a little bit of disagreement, and they've got plenty of time between now and then to figure it out, right? And then really, I think more than anything is if the government shutdown is able to finish and reopen, we'll start getting those official government info documents, and that'll probably drive some more confidence in direction, right? But overall, FOMC came and went, and I really have no issues, right? So hopefully, all the little random stocks, from the tech ones to the weed ones to everything in between, hopefully they start to follow the index strength. That's really what I'm looking for across just about every single sector right now, all right? So before we do go any further, though, and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel. Share this video online with your friends. Comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms. But for real, just being here, giving me your time, oh, I'm so grateful for it, all right? So, look, I'm not going to do individual chapters. I think everything I'm going to say applies to just about every single ticker here, all right? So, I started the video with it. I'm going to say it one more time. It does bother me that the market is so well. And when I say the market, I mean 3 things. I mean the Dow Jones, gap up all-time high, gap up all-time high 4 days in a row, right? I mean the S&P 500, exact same thing. And I actually mean the NASDAQ. Oops, CCU, is this a good stock? Oh, interesting. What's your volume here? Oh, volume is really low. I saw this crazy. CCU, hey, if it gets over 1325, might be interesting. Sometimes pudgy finger typos do some really good things, all right? And then the Nasdaq, that's the last part of the market, and you know, I'm surprised all three are doing well, but this, let alone almost every other sector, isn't really following it, right? So on the annoying side, but hey, we're here to trade the realities of today, not, you know, question things and then get stuck, right? So right now, what am I looking at when I'm looking at the sector? I'm looking at some concerns, right? We've been under the 8 moving average for what looks like an entire 2 weeks, going on to the third one right now. We are now under, and again, it's only one candle in a doji, right? I need more before I'm going to start freaking out, even though it's 2, right? That's not a great one. Doji doesn't count. It's the next one that's probably going to matter. We're under the 50. And if you lose the 8, you go to the 20. You lose the 20, you go to the 50. You lose the 50, you come to the 100. And that's a pretty bad fall right there, right? I'll draw this line, and I think this is a decent line. It's not quite 50%. And then let me see, what's this line? This isn't a bad line either. I don't know if I want to draw this new line or not. Look, I'm not going to draw it. I think I'm going to leave this here just to emphasize it, and then I'll delete it. We can't lose 125, all right? And really, at this point, if we lose, oh, we're at it. You lose 136, it'll probably, yeah, if you come to like 135, 134, you're going to probably quickly fall to this 125. If you lose 125, you saw, I originally wanted to put my line right here, but it wasn't quite 50% of this. It was the top of that, bottom of that. I didn't like that. It would actually probably come a little closer to that. Now you're at 50, you're actually at the bottom, and at that point you're close enough to that. That's not the line, it is this. 125 is the next line before this thing comes down to 1. All right, you can't lose 125, okay? Ultimately, we don't want to lose the 50 moving average, and like I said, the big line, and we're basically a penny from it, we can't lose 134. You know what I mean? So if this can get over 168, that's what's going to make me happy. That's what's going to be good. Our next line up is almost it's actually more than $1 up, right? So that's a monster percentage. Red, green, red. Like, this is a fast up and down, right? And we saw a peak of it for a bit, right? So get me over 170 and I'm going to love this stock. Really, under that, it's tough trading right now, all right? CGC, same story, but actually a little bit scarier, okay? What we'd been saying, and I haven't made videos in a while, and I do apologize about that, but this should be a tough cluster to lose. There are 4 moving averages. There's the 20, the 8, the 100, and the 50, right? All of them except the purple one. They're all right here. And we started testing it. All of a sudden, we're now coming down as the cluster is staying here. And not only that, we are under, arguably confirmed, and I mean, that's now the 3rd candle. That's under all the moving averages, right? Are we here yet? Yeah, we're right here right now. Next place I would expect this to come down is $1.20. I'm actually closer to $1.18. Might even fall as low as $1.11. This is below all the moving averages. That is not a good thing. And it is the polar opposite of the Dow Jones, which is wildly annoying and pretty crazy in all honesty, all right? So ultimately, the only thing I can say is this has to get back over 146. Maybe we can lower this line. I don't know if I want to mess with this. I'll lower it. Let's lower it. What does that look like? I basically went with the bottom of this thing. That's almost the top. It's not even really that strong a line. Maybe it's a 50%. Let's go to 142. We'll call it 142. I'm okay with it. Break 142, and I'll be interested in this. Maybe let's even raise it a cent or 2. Let's call it 134, 130, 143, whatever. Get over that, and I'll like this. Otherwise, like I said, right now the expectation is $1.20, and then a drop to $1.10 from there. CGC is the one that is actually starting to fail the supports, and that's not what we want to see as we look across the sector, right? I forgot ACB on the opening thoughts, but look, this is basically at the same place, right? This was looking really, really good. I remember really, really liking ACB, and all of a sudden we find ourselves down here sitting at the last of the moving averages, losing what actually was a pretty strong cluster that should have been hard to lose, right? So we cannot lose that right there. It's basically this line right here. Has to stay over 480. If this loses 480, ACB is going to be very worrisome. Man, realistically, this has to get back over 560. Maybe 555, $5.55, but yeah, basically you're splitting pennies at that point, right? All of these lower indicators have been bad. I really haven't been talking about them much because they're not, it's up here that matters the most. But yeah, TLRY is not looking good, lower indicators. CGC is not looking good, lower indicators, reds over greens and negative MACDs, and yeah, it's getting tough right now, right? You look at MSOS, we've been holding, trying to break this previous death line. All of a sudden we're now right back under the 50, right? This 50 was a strong line, gave us a good bounce the first time, couldn't do it a second time. That's actually really disappointing. Normally, this strong a line only touched once, should not fail that hard, but so far that's been the case, right? So are we here? Yeah, that's where we're at. 410 is basically the next place, and then under 4 is the next place. This has to get back over 5. There's nothing else right there. As we look at SNDL, and really as we look into HITI, these two were the ones that I liked prior to a lot of the, like, you know, there was like a CBD post that Trump posted, right? That, like, you know, it's good for the elderly and stuff like that. That was a nice little hype pop, but like these were doing well before a little bit of that hype pop that kind of fueled the rest of the sector, right? But hey, even SNDL, which was holding the 8 and the 20 so well, has lost the 8, lost the 20, and seemingly lost the 50. It's now sitting at our 222 support, excuse me. You lose this, you're basically coming down to 2. That's another, what, 10% loss right there if it falls, right? You can make the argument that if this can get over 230, there's a decent trade all the way up to 240. 10 cents is not a bad 5%. I'm never here to poo-poo 5%, right? But personally, I would love this to get over 250, and then I'll start thinking over all the moving averages and going up, right? Even with HITI, like I said, this and SNDL, they were holding the 8 and the 20 so well. And then, you know, once you lose them, it gets tough, right? Just like SNDL, this is at least holding a support line. With really HITI and SNDL, these are at least over a number of moving averages. And that was kind of the mix, right? There were some that were either at the last one or under it. There were some that had, you know, trying to hold the 50, trying not to confirm the 50, but at least over the 100 and the 200, right? So overall, the sector is tough. This will really need to get over 350 for me to get back excited. Again, you can make the argument that there's somewhere between, you know, 325 and 350 a decent trade right there. That's a little closer to 10%. That's almost a 30-cent move right there, right? But yeah, overall, it is, one more time, disappointing. I can't stress this enough. The Dow Jones is over all 5 and flying. The S&P 500 is over all 5 and flying. The stock should too, and hopefully, now that FOMC is behind us, now that a couple important earnings are here and gone, hopefully the rest will follow, all right? Let me know your thoughts. Let me know your opinions, even if you disagree. Oh, I appreciate you so much.